Hey guys, welcome back to the channel. There's obviously been a fair bit of panic in Bitcoin and the markets, more of the recession talks coming through. So what I thought today is I would put together a beautiful little agenda here where we can cover off a lot of the macroeconomic and market sentiment readings along with price and time action to potentially identify when the end of the crash is, or more importantly, when we start to see things boom. Now, I've talked about this in detail in recent videos, going through each of the agenda items individually over the last couple of weeks, and of course, over the last several months, as Bitcoin has been down for nearly 6 months to the day. So in this video, I wanted to bring it all together and look at it at a little more high level so that we can keep up to date with what's going on in the market. If you like the sound of that, hit the subscribe button. Don't miss out on the content as I go through this in more detail in each of the videos. Today is a summation of everything that we're looking at. So to bring you all up to speed. Of course, if you are a returning subscriber, hit the like button. Thanks again for your support here on the channel. Today's agenda, and I hope to do this in under 30 minutes, but we'll obviously know that by the end of it. Looking at the panic day and that crash that we saw recently, basically on Friday there, that led to Bitcoin hitting $52,500. Nice little recovery here over the weekend, getting back to 55 and closing above the 5th of July low at 53.5. So a really good start, or at least a hopeful end to the week, although the downtrend is not over. But back to the agenda here before I get into the Bitcoin stuff. S&P 500 breakout, a US dollar breakdown, market sentiment. We'll look at fear and greed for both the stock market and Bitcoin. A quick look at the Google Trends word, that's something we'll keep up to date with. Exchange volume, mostly the volume on the chart itself, as we've seen many times. Almost every single time when Bitcoin breaks out, you'll see that volume pick up and you'll know when that is occurring on the shorter term timeframes. A look at September into Q4. Of course, I went through this with the September video on the channel. So I do an analysis. I've got a series there looking at each of the months. We'll look at some fractals, timeframes, and then one of the most important things, our swing chart with the Gann analysis, price, pattern, time, volatility. So 2 seconds here, the 18-year cycle. This is a stage that we are in, winner's curse phase. Of course, this is all my opinion from my analysis of over 16 years in the markets, starting with real estate investing and then getting into trading around 2010, Bitcoin in 2017. Winner's curse phase is one of those stages where essentially prices are going up. It doesn't mean it goes up every day. It's pretty silly to think that. I hope we're beyond that now, but you'll see higher lows continue to form. So S&P 500 breakout to new all-time highs. That has happened for the last 12 months, right? Well, we've been breaking into new fresh highs and then into new all-time highs as it did in January 2024. And here we are. Again, higher lows continue to form on the macro chart here. Now, what I've got here for the breakout, new all-time highs, with the S&P 500, we're seeing similar pattern repeats for each of the previous Bitcoin cycles. For Bitcoin to pump up into those new fresh prices, these arrows pointing up are essentially the election months. They're your Novembers in each of the previous years, 2012, 16, and 20. Prior to that, this little arrow here is basically just pointing at where the S&P 500 broke into fresh highs in the case of 2012. And then in the most recent elections, 2016 and 2020, it broke into new all-time highs, had the pullback, election time, because there's an uncertainty in the market, and it seems like we're going through that again. Each of the times are different with different reasons for uncertainty, but the pattern basically remains the same. That's what it means. That's what I take from the saying, this time is different. Like, they're the four most costly words for an investor. Because each time is different. It's different enough so that you can't see the patterns, I guess. But when you look at the price chart and the timing of things, it pretty much works out the same thing over and over again. But there's always different reasons. And most people, the vast majority of people, look at the news, look at news headlines, and they say this time is different. And I see that in the comments section. And hopefully you guys are paying some attention to those as well. Most of the time, people will say, well, you've forgotten about this economic thing, or forgotten about this news headline, or this time is different because whatever is going on now, Japanese carry trade, it's unwinding. It's unprecedented. We haven't seen a Japanese yen carry trade event happened before? Of course not. We haven't seen that happen before, but we've basically seen the same pattern happen every single flipping time. Maybe it'll be different this time. I just don't like playing that game to hope that it's going to be different when it's been basically very, very similar over the course of this bull market. And we're still in the macro bull market, and things will adjust in the downtrend of that, basically the collapse, the major collapse, which I still think is coming later this decade. That's as clear as I can make it. We're in this stage here where Bitcoin's pulling back. The stock market's also having its uncertain times. And then what I've seen before is basically Bitcoin price go up. So this is one of those things I think we need to see first. Basically, some more certainty and strength regaining in the S&P 500 to either break into a new all-time high or get close to breaking into it again. Basically, putting in some swing bottoms and looking a little stronger here. Basically, the higher lows, higher highs, and continue to find a little bit of strength there. So that leads us to the US dollar. Now, again, I've covered this in great detail. So all I'm going to say here is it looks like the US dollar is getting ready to break down again. It doesn't happen straight away. Of course, maybe overnight we get the breakdown of 100 and it actually does happen straight away. But what we've seen in the past is basically a consolidation, and maybe you do get a little bit of a bounce here. Maybe it takes weeks or months, but eventually I see this breaking down, and that's typical of the second half of the real estate cycle where the US dollar goes on a longer downtrend, so a longer bear market than what it has done in the past. Now, with each of these moves, the US dollar has either consolidated or gone down for the move of the Bitcoin bull market. And then when the US dollar finds a fair bit of strength or is finding its ground here, that's pretty much where Bitcoin goes into its bear market. You can see again, Bitcoin's finding its ground here. That's the bull market of 2015 to 2017. Significant, very, very significant. $200 to 20,000. Doesn't look like it on the chart, but you can do it yourself on the chart or take my word for it. Up to you. You can see here that the US dollar was basically in a distribution phase before it broke down, and that was the Bitcoin bull market, the major bull market there. Other things were going on. You had plenty of different economic things that were happening. The election was in 2016 and then also led to that big boom. But I digress. I'm just looking at the moves of the US dollar in a broader sense, basically a bit more of a macro picture here. And if this is to occur, we get this breakdown underneath that sort of 100 to 101 level for mostly around 99 to 100 for the US dollar, then I think that would be the next piece of the puzzle to get this big major breakdown for the USD. The S&P 500 probably in that same sort of time frame I'm talking about now into Q4 will start to find its strength again. More certainty comes to the market. The election results are coming through. People are getting a little bit more feeling confident in the outcome as well, and then you start to see things flow on. And basically you need all of that money, all of that certainty come back in the market for the investors to get interested in riskier assets like BTC. It is still a risk asset, and that's how the market basically plays it at the moment. So that leads us to market sentiment, fear and greed. Well, simple look at the fear and greed chart for the S&P 500. This is on your CNN website, so you can look at the overview here. It's in fear at the moment, but this is the short-term stuff. Just taking a look back over the last year. Again, extreme fear typically happens at or around the lows, and we saw that again in August. Doesn't mean this can't come back down and you see another low put in, which is similar to what we saw back here. Similar seasonal patterns here. For 2023, you got the July move down, August, September, into this final low in October. And again, when I was covering this on the channel, it's another piece to the puzzle that you can throw into your own trading. You got like 3 similar waves here in broader structures. And in the bear market as well, you've got roughly 1, 2, 3 moves to the downside over a longer time frame. But markets typically work in these sorts of patterns. 2 to 4 swings to the downside, and 3 is quite a common move to the downside here. So it looks like we're in our second swing to the downside, which, maybe we do see a third that comes in to test the lows, maybe the second test the lows. The main thing I'm looking at here is how similar you can see these patterns where you've got this significant move down into some extreme fear, and then the market just needs to find its ground again, with that extra certainty and then start to find its way higher. I still think that is going to happen, which then leads on to more money flowing out through the system to higher prices for the rest of the market. So S&P, USD, market sentiment, fear and greed, and we'll also look at that for Bitcoin and cryptos. Google Trends and exchange volume. Quick look at that. Basically, here is Bitcoin past 5 years worldwide. It's at these low levels. It typically happens again every single time. People lose interest. They don't search Bitcoin. They don't search crypto. Again, you can see it right here. They search them at the peaks or at the significant crashes, right at those lows there. There's the June low. I think we had the November low there. There it is when FTX collapsed. And it's the same thing, rinse and repeat. Extreme times people are searching for the search term because they don't follow it day to day. And they just basically, when they hear about it on the news, that's when they search for it. And so you can see it play out time and time again on Google Trend Words here. So that's a look at that. We'll continue to cover that because what I would expect is as the market picks up, you probably start to see it break some tops here as we do climb to higher prices over the next sort of 3 to 4 months. There could be lower prices, and I'll get to that in just a moment on the chart itself. Exchange volume, I might cover that just a little later on, and we'll get into the crypto fear and greed, which is sitting at 26 today. So yesterday, 29, last week, 26, and we are seeing a fair bit of extreme fear and fear again around these lows. Now, you're probably familiar with this. This is our TIA Crypto Fear and Greed Index indicator that you can throw onto your charts. You can find a link to this in the video description. Use it, check it out, see if you want to backtest it, use it for your own trading. So back to the charts, having a look at these extreme fearful times. You can see it comes up in the red and then the orange is the fear. Each of these times, provided you're in a macro bull market, and like we've shown here with the 18-year cycle, the S&P 500, where the DX sits, and a host of all other indicators that I've looked at here, I suspect we're still in a macro bull market. Plenty of people would disagree. That's absolutely okay. Obviously, they trade their own plans. I'm just sharing with you what I look at here. Now, the extreme fear has happened at multiple occasions at many, many very good times to be chipping into the market or going degen and dumping absolutely everything into the market. I'll leave that up to you. But we're just looking here, look at the extreme fear and fearful times. What I'm saying here is the price range was from $6,000 to $10,000. You have to expect volatility throughout these markets. If you're going to look for major upside, there is going to be some major volatility. That is in the form of 20, 30, 40, 50, 60% drawdowns, which mean from peaks to troughs in that entire move. But to the upside, you've got hundreds of a percent. Will Bitcoin do it? I don't know for sure. No one knows for sure, not even Michael Saylor. So make sure you have a risk management plan in case things don't go your way. But the main thing here is every time you see these extreme fearful moments in the market, they have generally been relatively good areas to buy. If you can just avoid buying the peaks, like the majority of people do, you can see that in the trading volume, you can see it in the search volume, you can see it in the price charts that they're all buying towards those tops. If you can avoid that, you're going to be in a much better position than the vast majority of traders or investors or hopeful traders and investors out there. So at least keep this as part of your toolbox for your trading, where you can see a lot of these extreme fearful moments typically are at the lows. Now this is a daily chart, so that is a long time to sit it out. People get bored, they get annoyed, they come to the videos, they just take out some frustration. That's okay, I guess I'm a psychologist at the same time, but that's 2 months there. We're now sitting in 6 months down from the all-time high, and the same thing is happening again, just like it happened last year, where it was basically 6 to 7 months of a trading range between $25,000 and $31,000 before it took off. Now, I've gone through some other patterns before, which I guess leads us to the fractals and the timeframes here. We can take a look at the 2019 fractal, the 2023 timeframe, and you can see the movements are quite similar. We're just going to look at this particular chart here, 2019 to 2020. The black line is the current price action, and the red bars are what happened in 2019 into 2020. Pretty similar. You may have seen this before. The main thing I like to look at is how those swings are moving. Basically, the moves to the downside, to the upside. I'm not trying to predict where the price is going to go. I'm trying to forecast how much time the price could remain in its trend. And at the moment, the trend is down. And within that trend, it could be either consolidation in terms of reaccumulation before a breakout, or for the bears, it could be redistribution before a breakdown. It's entirely up to the individual. My game plan is that it's going to be an eventual breakout. We could test lows, we could test 49, we could test down to the 50% level at $44,500, but that is still on my bull market support level, along with $38,500 as well. So taking a look at the volume, this was another big one that I've used for basically every single bull and bear market for BTC. I'm looking at Kraken. You could choose the BLX, so the liquid index, bringing all of the data together. And I'm just watching the volume down here. I'm not overly concerned that the average is dropping off here for Bitcoin overall. I just want to look at where these major bottoms and tops are formed and on how much volume. So you see a lot of buying action coming in to the price here for January 2021, lower close, which starts to show some signs basically that the trend is wearing out. It went from 33, doubled, got to 64, 65K, then came all the way back down to that particular level. And then basically the volume dropped off on the way up. So essentially it was saying that it was a weak rally to the upside. Market started to come down and the volume increased, comparatively speaking, to that last rally up. So more volume coming in on the way down. And basically a weak rally again, lower volume, increased volume on the way down. And then each of these down bars started to show higher volume, but the price was stopping. So that's showing some sign that the price wants to stop out there, essentially stopping volume, which could potentially lead to a reversal. Again, it takes a long time for these things to play out. That was about 8 months of torture for the majority of people. Everything dropped off. You saw the Google search terms all drop off at those lows. So going back to 2022, around your lows here, and exchange volumes, everything else dropped off at that time. But I guess it's to be expected when you're at lows. Similar sort of thing, I think, has been going on now for a couple of months, where the volume obviously is less than the move to the upside. So overall, even though the price comes down, it doesn't seem like there is as many sellers as what there were buyers. So essentially you could call it your old diamond hands hanging on here for the ride. Nonetheless, if I were to see a breakdown of the 50% level, so basically through 44.5K, and then you saw increasing in volume with lower closes, that would be a warning sign. So basically an invalidation that the market is probably not going to go up, or at least not get up to those extreme heights again. It might have a weak rally, but it might not be those big gains that everyone was hoping for, like your hundreds, 200s, $500,000 Bitcoin. That sign again would be a breakdown of the 50% levels with closes underneath those levels on increasing volume. So that's a bit of a look at some Wyckoff analysis. You would see significant weakness come into the chart if that were to happen. Now, the market could go back up, but exactly what I said earlier is that it might be on a weaker rally. It might be a lower top forming over the next 12-ish months. It might just be able to pierce the top and then come back down. It'd essentially look like this sort of pattern here, where you see a breakdown, you've got some lower closes, and then on that rally, which we just looked at here, the volume was quite low on that particular rally. And we've seen it play out across all markets. We saw it on the dollar index here as well, as it was beginning to consolidate at this level. So we take it onto the futures chart. You can see that volume there was just so dead. Basically, weak rallies over the last coming up to 2 years now. But you could see extreme volume coming in as the price chart sold off, and then extreme volume going into that peak. So basically, all that excitement's worn out. And if we get the breakdown, you might see increased volume come into the market, which is a signal in itself to say that it's probably pretty weak and you're going to see further downside. So for the bulls, ideally, you'd want to see that on the DXY, on the US dollar, increased volume, lower closes under key levels on your long-term chart. And at the same time, or similar time, you'd see a reversal here for the price chart for BTC, some higher closes on the monthly, and increasing volume coming back in as it breaks some of these tops. If they're inside months, inside meaning lower highs, where is one over here? Anyway, lower highs, higher lows, if that's where what the bar looked like, then you could expect lower volume as well. That's just normal. We'll get to that in future videos, but for now, things still seem like they are on track for BTC. Now I'm going to have a look at the dominance here for Bitcoin dominance and the USDT dominance. So that takes our exchange volume analysis up to date. The Bitcoin dominance is still rising. You've got a few resistance levels coming up, roughly now 58%. The white line is our this one here, TIA Bitcoin dominance. Using the link in the video description for the 7-day free trial, you get the Bitcoin dominance. You got the other charts that I looked at earlier with the crypto fear and greed index, and also the total cryptocurrency market cap, where you can exclude Bitcoin, ETH, and the stable coins. Our final agenda items are the swing charts and our Gann analysis: price, pattern, time, volatility, and volume. To make the video under 30 minutes, we're just going to look at the swing charts today, which essentially focus a lot on price and also look at some of the time frames as well. Now, in terms of the swing chart, really simple. Gann swing indicator, lower highs, lower lows. At the moment, it's a high low, but we don't have a reversal bar yet to turn the swing indicator. So trend is down, and you'd expect it to continue to be down until you see a reversal in the trend. One little saving grace here with the weekly close is that it closed just above the 53K level. So it closed at 54,800, 54,900. So that's one small saving grace. However, it was the lowest close of basically this entire consolidation area, which potentially means it could lead to further downside over the coming weeks before I think we see a reversal here. Ideally, this is the reversal. This is the high low. I don't have any confirmation of that yet. You definitely want to see another bar come up and take out $60,000. But for now, this is the information that we have to work with. To the downside, as I said earlier, above 44,600, things are still looking okay. So it could come down and test other liquidity levels, like around those high $40,000 levels. So that's on the swing chart there. Bringing it down to the shorter term time frame, still no signs here. Lower highs, lower lows on the swing chart. The 4 hour, however, has given us a slightly higher higher highs, and the lows are still lower lows. So there might be something occurring here, but again, it needs to get back above at least the short term at 56K, and then on the longer term timeframes, we definitely need to see some breaks back above the 61.5K level. 61,500 is the halfway point through the consolidation range. So basically, Bitcoin's got a couple of things to do to get back into a longer term sign of strength. But for the short term, 53K is a good sign, $56,200, and then eventually that 61,500. For the total cryptocurrency market cap, so everything out there, cryptos, Bitcoins, and this one also includes a bit of stable coins here. The 50% level has been tested at 1.7 trillion, still above, so it's in a stronger position, but it's in this choppy zone here, as we've looked at for the last several weeks, because it's underneath the 2.2 trillion. Strength comes above 2.2 and weakness below 1.7. Big volume at that particular low, and so far on a 50% extension, we've seen a close above 1.865. So last week's close was at 1.9. Good signs there on the extension, because if this was to play out down to another 100% hit, would be around 1.5 trillion. Speaking of trading, this week is our Bluffin trading competition. Use the link here for our free Ultimate Trader Accelerator Academy, and then also use the link down here for Bluffin. You'll get emails to show you the step-by-step process. Plenty of cash bonuses or USDT bonuses within Bluffin. It's a non-KYC exchange as well, as you can see down below. And you'll also get access to our trading community here with Bitcoin daily trades, ETH, Solana, altcoins, all put together by our coaches in TIA. You can also check out the trading results from our members here. Lots and lots of gains here and lots of people to interact with to help you along with your trading journey. So that, again, that link is down here. Register for the free Ultimate Trader Accelerator through Bluffin this week if you want to put your trading skills to the test or learn how to trade the markets like our members do. Thanks again for your support on the channel here, guys. I'll see you back at the next video. Don't forget to hit the like and subscribe button. Plenty more coming up while the markets are a little quiet. And let me know your thoughts here on Michael Saylor. Never sell your Bitcoin. I disagree. I want to hear from you guys. Pin comment down below, and I'll see you guys at the next video. Till then, take care and peace out.